Before we begin, I came across a very, very good YouTube video by Jim Rickards. I don't know if you guys know him. If you don't know him, you can Google him up. There's lots of videos by him, right? The goal of my presentation today is not to, let me just play this presentation. Okay. So the goal of my presentation today is not to convince anyone to buy gold and is not to deter anyone from buying something else, right? I'm just sharing with you what I know about this metal. I believe it is a good system of money. It's not the only system of money. There's fiat money, there's paintings, there's artwork. I believe it's a decent system of wealth preservation. It is not the only system of wealth preservation. I think you can put money in anything tangible. You can put money in real estate. You can put money in stocks. But stocks, you have to, it depends on if stocks are overvalued. That's when you shouldn't be putting money in. Now the golden question is, when are stocks overvalued? That's another discussion. But so in the last 10 years, we've had stocks rally. And so part of the growth is because companies actually are doing good. They're making better earnings. They're making more money. And part of the reason is also because of printing a lot of money by the government, right? So it's devalued the purchasing power of the dollar, because of which a company worth $1 is now worth $2. It's not really $2. It doesn't really have a lot more customers than it used to. But I mean, it may have one more customer, but it's being valued as if it has two more customers because of the simple demonetization of the dollar. Okay. There's a lot of questions that a lot of people will pose to you about gold, that it doesn't produce a yield. It can't be. I mean, there's not enough to go around in the world. There's a lot of questions. It's a good video. You guys can watch this video. It answers a lot of questions. It's a very boring, long, 1.5 hour long video by Jim Rickards. Okay. Jim used to work for Pentagon. He's doing other stuff now. He's a speaker. He talks. Some of the stuff he says makes sense. Some of the stuff he says doesn't make sense. Anyways, just take it with a grain of salt. It's a good video for you to understand and listen to in your spare time, maybe. I would recommend it. Okay. So not convincing anyone if you should buy gold or if you should not buy gold. The only thing is, if you do decide to buy gold, then buy physical gold. Why you should buy physical gold? Okay. I explained to you before we started about manipulation of the gold spot prices is possible through the futures contract. And the most important reason now is, so the central banks were net sellers of gold up until 2013, right? After the financial crisis in 2017, 2010, 11, 12, they were selling gold, right? They sold a lot of gold and they brought the price of gold down, right? So from 2011 to 2013, right, 14, they were net sellers of gold, okay? From that point onwards, they have been net buyers of gold, okay? As you can see, this is the chart. Now, there are a lot of if you just type central banks buying gold, a lot of articles are going to come up. If you type this year, a lot of articles are going to come up. If you type this last year, a lot of articles are going to come up. If you type the year before that, you will see that dated articles from 2016, 15, 17, 18, 19. Every year, the amount of buying by central banks around the world has been increasing, okay? It's been going up at a constant, sometimes inconsistent rate, but it's been going up. two articles I came across, which are the latest, and they're both Bloomberg articles. So it's not a conspiracy theory website that I just went and copied. There's some decent ones. There's Forbes, there's Bloomberg. Okay, now central banks have bought more bullion last year than any time since 1971. That's when the U.S. ended the gold standard. Okay. Again, I'm not discussing about the gold standard. There are two links. You can read what's going on. The outflows from ETFs, gold ETFs, has been at a record high. And the inflows, or the actual physical buying of physical gold, has been at an all-time high. So this is telling you that people are actually started to buy physical gold, right? How are prices determined? You can go look at this article. This is a good article. You don't need to buy anything. I'm not advocating go buy gold from them, okay? All I'm saying is go understand how how pricing for gold is done, okay? We talked about the selling of futures, spot price control, okay, earlier. So central banks have been buying, the top banks that are buying are, so in a couple of years back, I remember the U.S. government put some sanctions on Russia, and they used the dollar as a economic weapon per se to punish and put sanctions on Russia to do what they were trying to get them to do what they want. And this has been a pattern in the last couple of years, but now as some of the other powers are coming up, economic powers are coming up, people are trying to go around the SWIFT system. They're trying to go outside. They're trying to basically de-dollarize their assets, right? A lot of countries have their reserves in US dollars. They're trying to say, well, US has been printing so much money. They have been, the dollar is not pegged to gold anymore since 1971. There's no dollar standard. There's no gold standard, right? So we can continuously print as much money as we want, right? And we print our own money, so there's no checks and balances right now. Our debt ceiling increases every year, year over year. We initially promised that we're going to start raising interest rates, and as soon as we said that, our markets started tanking. The Fed had to make a 360 turn in a matter of a month and go from from increasing interest rates to decreasing interest rates, because we cannot even withstand a 1 percentage point of rate increases. So we have been decreasing our interest rates and we've been keeping them low. The reason we've been keeping them low is that it is helping our government pay back the debt that it owes on the, I think last year, don't quote me, but I think we paid 650 billion or close to 700 billion in interest payment. That's a lot of money, right? So our defense budget is about 800 billion. Our Medicare, Medicaid is about, I think, 340, 350, 350, something like 700-800 billion together, right? And you can imagine that we pay 650 billion in interest payments. Now, imagine if it's like what we owe on our credit card. Now, if that interest rate were to increase, U.S. is not going to be able to pay back its debt, okay? That's one big problem. Second problem is there's a lot of companies, right, which don't really make a lot of money on their equity. For example, you're a company, you're running, so you assume you're getting a good company will probably give you 20% equity return, at least 10% equity return. Some companies are really bad. They're only giving you maybe 5%, 6%. They're barely making any money, okay? But because they can borrow cheap money from the government, they're getting money from the government at 1% or 0% or whatever. It's extremely low. They use that money, the cheap cash, to go buy back their own stock. That stock buyback for the last 10 years is what is primarily pushing this market higher and higher and higher and higher and higher, in my opinion. I've looked at different things. I've done some research. I think primarily that is the only reason that has been making these things go higher and higher. There is some genuine growth in some companies. That I do not think is the only reason why things are going up. Because the only thing that is primarily controlling this entire show of musical chairs is the Federal Reserve. They say that they start raising rates and this market's going to tank. They say that we're going to have an easy monetary policy and the market starts rising again, right? Now, how much is it going to rise? How long is it going to rise? We're having the effect of giving, you can say, booster shots to a patient. So every time you give it, it's the law of diminishing returns. Every time you get medication, it has less effect going forwards, right? Eventually, it's going to stop working. Does it stop working this year? Maybe. Does it stop working next year? Maybe. I don't know. But in Europe, in Japan, they tried it, didn't work. In Europe, they tried it, didn't work. Europe actually has negative interest rates in German bonds. So you give them $100 and they're going to return you 99 or 98 in 2 years, right? They're charging you to park your money. So you can Google everything up. Everyone knows about this. Anyways, so now you don't buy gold. You don't buy gold in cases of where you treat it like an investment, a normal investment. Gold is a panic investment. Gold is basically something you buy to preserve what you have in times of crisis. You buy it because it's not going to do anything for a long time, right? It may not do anything. It may be dead investment for 10 years. Then you'll have some sort of crisis and it's going to skyrocket up 600%. And then it's going to come down again another maybe 1/3, and then it'll settle. Then it may not do anything. It may just be churning for a long time, and then it's going to shoot up again. It's like VIX, right? Except that VIX goes up, the VIX indicator, volatility indicator, goes up and down much more frequently in showing and depicting market panic. Gold, you can think of gold as a very, very long-term VIX indicator, right? So it is a VIX indicator, and basically a gauge of fear and panic, and as well as preservation of your conversion from fiat to something physical, something more concrete. Okay. Again, if anybody says, well, gold doesn't do anything, gold doesn't give you any yield, watch this video again. It's an 1.5-hour video. It answers every single question. Okay, I'm not going to do that right now. It's just going to take forever. If central banks, if it's useless, central banks, why aren't they just selling it back out to the public? That's a question you should ask yourself. Okay. Russian central banks are buying it now. Chinese central banks are buying at all-time peaks. Even in Turkish central banks, Hungary is buying gold now. The top countries which have the most amount of gold is, again, United States #1, then Britain, France, Germany, Italy, same countries which were superpowers at one time, right? You had the Roman Empire, you had the British Empire, you had the Spanish Armada conquering everything around the world. Same countries, right? They've collected gold throughout when their empires were great. They have a lot of gold. So if gold was garbage and it didn't account to anything, they would be selling it, right? It's all-time high. They would sell it and just buy stocks. They just sell it and buy some paper bonds or something, right? So think about that. They have now, there's no checks and balances right now on the US dollar. It can, how does the Fed decide if it's raising interest rates or if it's lowering interest rates? If it targets an inflation, right? It says, we want to have 2% inflation in the economy. How do they determine if it's 2% inflation? They use the CPI and PPI, which is Consumer Price Index and Producer Price Index, right? And how they calculate that basket value is also very non-deterministic. Like, they keep taking stuff in and out of that basket. I don't like how they do it. Some people, again, people are going to argue with me that it's right. This is just my opinion. I think this the whole method of CPI, PPI calculation is just garbage. This is not what's happening in the real world, okay? In the real world, your student loan, your tuition grows by 6 to 8% every year. If you have kids, if you went to college yourself, just compare that with what you paid last year and what you paid before that. And your younger brother and sister, if they're coming to college, or your kids coming to college, what they're paying compared to you. So if tuition is increasing, look at your grocery bill, right? I know people say, oh, food prices are volatile. They omit that. But why? What sort of a, why are you not factoring that into your calculation? Humans need food, right? So it is I mean, food prices, in fact, are the most, they have been some of the most stable things in the world, right? Not like the stock market, but they're constantly growing also. Look at what a contractor is charging you now to do your basement compared to what it cost you to do your basement 2 years ago. Look at even toys. Everything is increased in value. The only things that haven't increased are like furniture, which actually has gotten cheaper, or maybe because the quality has gone down, right? Your rent for your transportation has gone up. New York City MetroCard has gone up. New Jersey Transit costs have gone up. So everything that you think about has gone up. There's only a couple of ways you can preserve your money. You can preserve your money by putting it in something which is tangible. And okay, so let me explain. Let me give you another rant on this thing. You can preserve your money into something tangible to preserve it, right? You can do, so what do you do? How do you save this constant dollar devaluation? So the purchasing power of the dollar has gone down tremendously. It's down to 97% from the time when they initially launched the currency, and just goes down it's like a tangent, always approaching, always getting halved, but never touching. How do you preserve it? You can buy something. Look at the rents. The rents have gone up year over year over year, right? They continuously go up. Is your salary increasing? No. So they get scared and start increasing interest rates when they see wage inflation. Wage inflation, when the jobs number comes out, wage inflation is the most important number. That tells them if it's going to cause inflation or not. But even outside of wage inflation, everything else is still increasing in price because, things cost more, and they're continuously printing. So obviously it's going to cost more and more. Also, population's increasing. There's more resources on this. There's more people on this planet competing for fewer resources. That's another reason. But according to their criteria, inflation is still not 2%. It's barely 2%, which I find very hard to believe. And I'm just sharing with you guys. There's going to be a lot of people which are going to rant about the same thing, but you decide. You think about it, right? So maybe buying real estate is a good investment, but again, don't buy it when the prices are super high, right? Buying stocks is good. Don't buy it at the peak. Buy it when they're down. There's other ways that we'll cover that in a different topic. So how do you time it? When do you buy it? When's a good time? When's not? That's a topic for another discussion. So what do you buy? What do I recommend buying? So because gold is it's for panic times, you always need to hold physical gold. You don't need to hold ETFs, because if there was real panic and if the banks ever decided, I'm saying that these kind of events happen once every 20 years, okay? So people are going to tell you, well, this never happens, never happens. You know what? Maybe, how old are they? They haven't done anything either. I mean, I'm not that old, but I've just looked at history. If you just, I'll show you the chart, and I'll make you guys look at things with me, and then you'll understand and understand a little better. This is a 6,000-year-old asset class from the history of time to now. A lot of fiat currencies came and went. There was Turkish lira, there was dinars, there was XYZ, ABC, a lot of, from then to now, there have been about over 3,000 types of fiat currencies that have come and gone, okay? And this is still going on. Gold is still standing the test of time. Now, I'm saying buy physical gold because maybe in a time of panic, you're not going to be able to have access to your, if you buy GLD, if there was panic, GLD, yes, would increase, but you never actually ever get your hands on. If you ever told them, well, you know what, I need to get the gold that it basically represents, I don't know if it'll happen or not. I'm not saying that they may not give it to you. I'm not comfortable in it. I want to have it physical. So because at one point, if if people are manipulating the futures market, or if people are manipulating the spot market and they're not able to deliver physical gold, the actual price of physical gold and the actual price, the price of paper gold is going to start diverging. And that is a very dangerous sign. When that happens, you know that actual physical gold is going to go up much higher, way, way higher than paper gold, right? So you can still take advantage of it while gold is available at the price of paper gold, which is spot price. So I tell you guys to buy gold bars. They come in small packets of pre-packaged. They have a certificate on them. You can keep it packaged and you can resell them back as is, right? So the buying, when you're buying gold, you normally pay anywhere from 2% to 5% over spot. If the spot price of gold is $1,000 per ounce, they're going to charge you maybe $1,050 for 1 ounce, right? That's like 5%. 5% is high. I would say anywhere between 1 to 5% is good, right? It depends on where you're getting it. You have to do some research. So they tell you, they'll give you the price of 2 p.m. close of London. It depends. Everyone's different, but normally they give you London close price, right? Whatever it closed at 2 p.m., that's the price they go by. You can check the price of gold anytime. Just type XAU/USD, or XAU is basically gold spot, okay? Now, when you go back to sell it, if you take a bar with the certificate, there's no charge for selling it. You'll get spot. You want to go back, you sell it back at $1. Whatever's trading it at $1. There's no, what do you call it? You only pay a premium when you're buying normally. I'm just saying this is how I've dealt with it, unless your experience has been different. So right now, gold is, if you buy pure gold, 22 karat or something, like bars like this, okay, they come in certificates, right? And you pay spot price. Now, another way you can buy is actually buy old jewelry, spoons, artifacts, which have gold in them. And you don't have to pay the spot price. You can actually buy it much cheaper. You just buy a kit from Amazon, eBay for $10 to $100. The $100, some of them are like laser guns and stuff, which can check for density and a lot of other things, right? Those are for professionals. I mean, if you're going to be buying it regularly, you might as well get like a $100 toy and take it with you and then use that to buy. And this is actually a stone. You can take a gold, somebody wants to, you can buy a gold chain from somebody. He says, oh, this is 18, 20 karat gold or whatever. So you take that, rub it over here, and then whatever little bit of gold, that little tiny gold that comes out, there's bottles. There's one for 18. There's one for 20 karat gold. The guy says, hey, it's 20 karat gold, and then you take the 20 and then you put it on there. It doesn't do anything. It doesn't change color. But if you took the 18 and you put it, it changes color, which means that it's not 20, it's actually 18 karat gold. So it comes with you can Google, everything is just, there's YouTube videos of everything, right? So you can learn everything by yourself. How do you check this? How do you check that? I can't jam all the information on one PowerPoint, but you get the point. So you can find deals in actually buying jewelry too, right? You pay by whatever the weight is, if it's pure. If it's otherwise, normally jewelers pay you maybe just don't buy jewelry. If you're doing it as an asset, I say don't buy jewelry, because they only give you 40%. There's only 40% gold or 60% gold. The rest of it is just copper and other stuff, which is not worth anything. Okay, this was my presentation. Now, one important thing I want you guys to look at is last 10 years, So everybody must have heard this, right, in the past that, well, gold took a huge dip. It was really high in 2011 and it crashed. Stock market's been up forever. So which one do you think, which one of these charts is gold and which one do you think is SPY, S&P 500? Guys, you want to answer?
The bottom one is
The,
gold.
bo the bottom one is not gold. The bottom one is
S&P.
S&P. So S&P is up 214% the last 10 years. Gold is up 346%. Okay, last 10 years. So, you know, it's, and the other thing I want to show you guys, I actually want to end my presentation and we can stop recording. Imran?